that we are going to be seeing $48 silver. There's going to be a $10 move coming up very quickly here, I believe. Let's zoom in on this on the old chart. You can see the cup and handle, the 2011 peak. It was at 28.33 then. There was the cup and handle. There's the resistance. There's the inverse head and shoulders. I said I believe that we are headed up to these prices. Now, when it does hit the $48 to $50 level, you're going to see it probably be repelled and it'll chop sideways a little bit. When it blasts through it, we're in clear air. And I've pointed this out many times before, and I believe that I was the very first person to notice this. This cup and handle is inside of a 50, it's from January of 1980. So it's a 45-year cup and handle.
Analysts like InvestingHaven, Bitcoin.com, and others forecast silver is poised for a rapid $10 move, climbing to $48 to $50 by year-end 2025, driven by technical breakout structures and strong fundamentals. This surge is supported by long-term technical patterns like a 45-year cup and handle formation dating back to 1980, a clear breakout above key thresholds. For example, $28.80 and $32.70 has confirmed a bullish pattern, aligning with the historical trajectory toward approximately $50 targets. Mike Maloney, a well-known investor, author, and educator in the precious metals space, in his updated Silver Slingshot presentation, draws attention to silver's similar setup, showing that after hitting resistance around $36 to $37, it briefly pulled back, but only after overcoming a 13-year-old technical barrier. This resistance was weak, with minimal prior trading volume at those levels, so the pullback was likely temporary. He argues silver is on the verge of a massive breakout once momentum builds, comparing it to the COVID crash, when silver was severely undervalued relative to gold. He had heavily bought silver then, especially when the gold-silver ratio spiked above 110 to 1. Silver mining stocks often lead to physical silver price movements, making them valuable leading indicators for the broader silver market. The advanced decline line has proven particularly useful, serving as a leading indicator with an 80 to 85% success rate, according to the daily gold analysis. Current market conditions show a positive divergence between stocks and metal prices, with mining equities displaying relative strength. This broad participation across the sector, reflected in strong market breadth indicators, typically precedes significant moves in the underlying metals. The advanced decline line frequently makes higher highs before the metal itself, indicating broad market participation and healthy sector strength that typically precedes higher silver prices, notes Jordan. Overall, Mike believes silver's breakout is just beginning, and that once retail and institutional buying kicks in, it could propel prices dramatically higher. Watch the video for more details, and don't forget to like and subscribe for updates.
And so I need to revisit a presentation that I made just a couple of weeks ago titled The Silver Slingshot. Now, I made this at the Investor Summit at Sea a little over 2 weeks ago. And in there, I start with gold, and I show where gold has gone, and I predict that silver is going to be making these moves very shortly. So let's analyze a little bit of gold. Now, gold had put in this pan and handle or cup and handle formation, and it had put in a triple top, and it was making an inverse head and shoulders when I first saw this. And what happened? I predicted that it was going to make a move like that. It was below $2,000. Now, I'm updating this a little. There's the pan and handle. This is a close-up of that area. But notice that the date is April 12th of 2024. So that's more than a year before I made this a presentation at the Investor Summit at Sea. So this was basically an update. Well, guess what? I've updated the Investor Summit at the Silver Slingshot presentation So this is basically an update of an update. But when I made this presentation back in April of 2024, there was that pan and handle. It had just broken that, I was then actually updating a previous presentation where I said that we were going to much higher levels than $2,000. So it was at 2374 when I made this presentation. There was the triple top, and I said when it busts through this triple top, we have a slingshot move coming. There was the inverse head and shoulders predicting it, and you can draw a line right where that triple top was. You can draw a line across the neckline of the head. This is an inverse head and shoulders. Flip it upside down, and that's the predicted move. It actually happened much more steeply. This was actually copy-pasted from the last frame where I was predicting a move, and it happened very, very. Then I updated this for Investor Summit at Sea. So this chart was made June 20 of 2025. You can see what the move was. It hit $3,500 and then pulled back to 33.69 basically. I'm rounding. But it made a top. It hit $3,500. It bounced back. It's still below $3,500. It's bouncing around. It's noodling sideways. And everybody's saying, oh, I missed it. I don't want to buy at a high. The top is in, and I missed the entire move. Well, guess what? They said that there. They said that there. They said that there. And they said that there. The whole thing is taking a position and hanging on. I mean, in order to think that this is a top, you also have to think, well, then they're going to stop. If it's going to fall from here, they would have to stop creating currency. They'd have to stop typing new dollars into existence. Now, I want to point out the COVID crash. During COVID, remember that. This is March of 2020, that crash right there. And everybody thought the world was coming to an end. People were dying right and left. Remember how scary that was at the time, the lockdowns. Oh, by the way, while I was making this presentation, Amazon sent me a message, and this is from somebody that bought the book. It says that the package was delivered, and I received a box with the incorrect item: breastfeeding nipple breastfeeding nipple covers. Please send me the book. Please advise ASAP. Well, whoever this is, I guarantee you'll get the book. Somebody will handle this. This isn't exactly my job, but I just had to read everybody this because I had to say breastfeeding nipple covers in a video sometime or another. I thought that was hilarious when I read it. So let's go to silver. And there is the COVID crash. And I want to zoom up on the COVID crash here. Now, people thought the world was coming to an end, and so did I. I had already, by this time, I was following COVID in late January. And so all through February, I loaded up on things. I actually had, it really looked like this was going to kill a lot of people. Well, it was far exaggerated, and we know what the CDC and the NIH and Anthony Fauci did. But by the time March rolled around, I had enough supplies to close my front door. I lived in a penthouse in San Juan then, not up at my farm here. And beautiful, it looked like an art gallery, not like this, just plain. Right now, it's mission first, team second, individual third. So I've got a big mission that I'm trying to do, and decorating this place is like the lowest priority. So anyway, I wanted to buy gold with every fiber in my body. People were scared. I had enough supplies already to close my front door for 6 months and not open it, including enough oxygen to do a 2-liter flow 24/7 for an entire week. So I wouldn't have to go to a hospital. But Robert Kiyosaki used to say, true investors don't run from crisis, they run towards it. And when silver hit this low, the gold-silver ratio went up to over 123. It was just below 125 at the peak. And I didn't buy gold. I bought silver down at these prices. I didn't nail the 123 to 1 or 124 to 1, whatever it went to, but I did buy, and I added significantly to my position where the ratio was over 110 and another purchase over 100. And so let's get to silver now. You'll notice that there's the COVID crash, and there is the cup and handle, and there's the inverse head and shoulders. There is, multiple hits on trying to break through. So it's not the same triple top that you saw before, but you can consider that the neckline. And if you flip that upside down, it's the predicted move. Again, notice the date, April of 2024. But we ran into some resistance there. There was the previous peaks. And so this is the update that I did for Investor Summit at Sea of June 20, 2025 is this chart. And you can see the resistance that we had run into that sort of stopped the progression. And then when it finally busted through that resistance, we were at $36 then, but it ran into this resistance that was 13 years old. And that resistance was a 37.46 high and 36.89 close. The high was actually the day after the highest close. It closed 36.89. The next day it opened, and it bounced around and made a high of 37.46 and then closed down in the 34s actually on that day. But that was the resistance that we were running into. Now this is mostly technical analyst resistance. There's technical analysts looking at this, betting that it's going to hit this resistance and go down. And they're right. They cause themselves to be right. If there's enough people looking at this and trading off of it, it's a self-fulfilling prophecy. And so this caused it to do a little bit of a pullback. But when you actually look at the real resistance, the people that bought back then, that are waiting to get back to even, this was only 2 trading days. So it was nothing. It was bound to fail and fail quickly. And so it did today.
Mike Maloney argues that silver is still vastly undervalued, even at around $38. The immediate challenge for silver lies at the $37 per ounce resistance level, where it's currently consolidating. Once this level is cleared, the technical analysis points to a substantial likelihood of reaching $41, a level confirmed by multiple pattern projections. The monthly chart shows clear resistance at $41 after the $38 level is breached. According to the daily gold analysis, there's potential for a quarterly close above $38 by the end of September 2025, which would be a significant technical achievement and a potential catalyst for further gains. Mike also highlights persistent supply deficits. Silver demand has outpaced supply for the last 5 to 7 years, and it's accelerating. These deficits are growing as more investors buy silver through ETFs and physical products. Since silver production can't quickly ramp up, most silver is mined as a byproduct. The only way to restore balance is through significantly higher prices, which will likely overshoot as investor demand surges and new mine supply lags. Now let's have a look back at the interview.
I believe that they are destined for bubbles far greater this time around. So for fun, let's compute what the silver price would be if it went into the same type of bubble relative to the growth factor in the currency supply and other assets since 1980. The numbers below show where silver would be relative to its 1980 price, derived simply by multiplying the 1980 52.50 high. That was the intraday high on the Chicago Mercantile Exchange. The close was $50. By the percentage rise in these other categories since then to their most recent peaks in this decade. Now, some of them have gone to even higher peaks. This was all written back in the summer of 2022. So this is as of 3 years ago. The Consumer Price Index 3 years ago predicted that silver would have to be $200 an ounce, $200 per ounce. That was the prediction 3 years ago. Has there been inflation since? The single-family median price home, $468 per ounce silver, if it had turned in the same percentage increases as single-family median price homes. The Wilshire 5000 stock index, this one will blow your mind, $2,178 silver per ounce, $21.78 per ounce. Now, that is not going to happen, but if it had grown by the same percentage as the Wilshire 5000. The 10-year Treasury bond, $1,059 as measured by the inverse of the yield. The U.S. GDP, $468, the same. So real estate has kept up with single-family homes. Silver went from $50 down to $4.30, and I've been buying it since those lows. From 1980 to 2002, I think it was, or 2003, and then started rising, and it has turned in spectacular performance this decade. Currency in circulation. So silver is measured in currency. How much currency have they printed? This is the paper currency in circulation. If it had kept up with the growth of currency in circulation, silver would have to be $971 an ounce. Now, I'm not saying it's going to $1,000 an ounce, but anything's possible. M2, $781 an ounce. M2 includes a bunch of bank credit. MZM, which they hid from us in February of 2021. They still collect the data. They just don't publish this. And that is $1,250 an ounce. Now, if you add all of these prices together and you divide them by the number of prices, you get the average. And the average is $921 per ounce. I'm not saying it's going there. What I'm saying is that $38 is still an absurdly low price. This is not the top, in my opinion. Now, let's take a look at the supply-demand. This is part of the update still. What you just saw was part of the presentation at Investor Summit at Sea. I inserted this just this evening. So, supply-demand. Between the black bars, you've got total supply, and then 2/3 the way down, total demand. You take the supply minus the demand, and you get the market balance. And for 5 years, there's been a deficit, minus 79 million ounces, minus I'm going to round 250 million ounces, minus 200 million ounces, minus 150 million ounces, minus 118 million ounces is the projection for 2025. But then you go down here, and there's the market balance less exchange-traded products. So people taking silver off the market in exchange-traded products. And instead of 5 years of deficits, you end up with 7 years of deficits. And it's far greater. So you've got minus 73 million ounces, 286 million ounces, 144, 132, 163, 210, and then it's estimating forecast of 187.6 for 2025. Boy, is this going to be wrong. This incorporates exchange-traded products, and as we speak, the silver slingshot has begun. And as it progresses, more and more people are going to rush into this, and that number will probably end up closer to 300 million ounces. What is when you've got a supply and demand issue, what puts them back into balance? Price. It's the only thing that puts them back into balance. We got 7 years here of deficit. It's got to go back into balance somehow. The only thing that resolves that is price, but there's going to be a huge overshoot. Price increases production, but this is coming out of mines that take years to get into production. And so as demand increases, price has to rise, and it has to rise far further than the natural supply-demand balance that would occur if silver could come to market instantly.
Silver appears to be on the verge of a massive breakout, continuing supply shortfalls and rising investor interest as drivers for a possible jump to $48 to $50, with resistance levels between $37 and $41 being tested and good breadth in mining equities supporting the advance. The stage may be set for a robust rally, especially if silver closes over $38 by September 2025. Given silver's historical volatility and underperformance against other assets since 1980, many believe we are in the early stages of a long overdue revaluation. If silver hits $41, would you consider increasing your investment or waiting for a pullback? How much influence do you believe retail ETF inflows will have on silver prices over the next 6 to 12 months? Please leave your opinion in the comments section below. If you found this helpful video, please like and subscribe to stay up to date on our latest content.